The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the podcast on Monday, the 11th of January 2021. On the podcast today, Nick Lee, Investment Director at Pires Investments, provides an update on its investment in SureValley Ventures in relation to CameraMatics. Also on the podcast, Alan Green, CEO of Brand Communications, talks about Versarien, Venture Life Group and Bidstack. And at the end of the podcast, I have two very important lists for you. The top 5 most followed companies on Vox Markets in the last 24 hours and the top 5 most read RNSs too. By the way, you can see both these lists at voxmarkets.co.uk, where you can also check out lots of other content, and there's our COVID-19 index right there at the top of the page. Let's have a look at that. Biggest riser there today is Tizion Life Sciences, up 6.4%, followed by Way Education, up 4.17%. Biggest faller is Omega Diagnostics, that's down 6.25%, 52.5 pence. Check that out at voxmarkets.co.uk.
Vox Markets is an online community of investors that runs a free mobile and desktop platform that allows you to track news and updates about any UK-listed company, offering RNS push notifications, detailed charts, pricing data, and much more. Find out more at voxmarkets.co.uk/app.
And joining me on the podcast right now is Nick Lee, Director of Pires Investments, PIRI is ticker there. Nick, thanks for joining me.
Yeah, Justin, thanks for having me on.
Yeah, it's a pleasure. You're welcome, Nick. And listen, you've got some news out on one of the investee companies here. It's called CameraMatics, and they raised some money in a Series A funding round. We'll dig into that. But before we get into it, there's a little clue in the title there, Pires Investments. But just explain for people who've never heard about you before, right, exactly what you're about.
What we do. Okay, so we're an investment company listed on AIM, which really focuses on investing in next generation technology. And our portfolio really comprises a position in SureValley Ventures, which is a venture capital fund focused on particularly sort of software technology. And then we've got some other investments. So we've got an investment in Visibility, which is really a sort of cyber security data management business that's doing very well. And more recently, we've invested in a company called Low 6, which is focused on the sort of online gaming space, and also most recently an investment into a business that is operating or will be operating in the sort of digital asset DeFi space, which is a very sort of high growth area at the moment.
Yeah, very exciting, of course. Yeah. Okay, so today's news, of course, is about your investment in CameraMatics, or your investment via SureValley Ventures there. And so tell us what's happening here.
Right, so that's it's really another one of our investments that we have exposure to via that SureValley Ventures investment. And CameraMatics is focused in the sort of the telemetrics space, so very useful technology if you're managing fleets of trucks and vehicles. And I think the sort of the key point here though is to demonstrate that as companies in general within that portfolio progress, there's quite a good track record now of those companies steadily increasing in value. And I'll just sort of repeat something I've probably said before, which is, the valuation of these companies is pretty conservative in that, there's only ever an uplift in value in the event that a sort of third party funder comes in and puts money in the company. So it's sort of any valuation increase is clearly validated by, that third party investor.
Yeah.
Rather than a sort of director's valuation, writing up value because that's what the directors believe. This is third party sort of
exactly. So it's an investment there at that level. So it's a validation there, of course. And go on. Go on.
I was just going to say, and it sort of really demonstrates, because this is another one in probably a series of about 4 or 5 now of companies within this portfolio that have achieved, steady increases in value over the last probably 12 to 18 months.
Yeah, absolutely. And just CameraMatics, it does say, suggestion in the title there, but just explain, if you could, a bit more about this technology, Nick. What is it about? What does it do?
Yeah, so it's a bit more about, so it's really helping you monitor what your fleet of vehicles are up to. So one example is, there was a business where people would, bash into a stationary truck and then claim, bash an old car in and then claim all this damage on insurance. And, it was quite difficult to argue against. Whereas, with a lot of the vehicles now, you can have camera type sort of arrangements on board, which will be able to monitor the truck, and you'll be able to see exactly what's going in. So, for example, if somebody decides to deliberately drive into a stationary truck, then it's all on camera. Yeah. So it's really just helping to manage and maintain your fleet of vehicles.
Yeah, and absolutely. And in fact, just reading and you put it in a very easy to understand way there. And in fact, just reading here, it's SaaS based, isn't it? It's a full stack. In fact, it's in your RNS, so a full stack platform, modular software, AI systems, machine learning. And so what happens is it reduces accidents, improving operational efficiencies, managing compliance.
It's just a very efficient and effective way of managing a large fleet of vehicles.
And of course, there's a lot of money, a lot of investment in those big fleets. The big trucks are worth a chunk load of money. So you got to look after those investments, I suppose. And the more you can do that, the more the bottom line will prosper, I suppose, isn't it? Yeah.
So I think it's, again, but as I say, it's a really, given the portfolio of investments that we have, it's just yet another demonstration that there's a lot of value to be gained from these particular investments. They're all very exciting and in exciting sectors.
Yeah, absolutely. And just explain, this is an investment through Sure Valley, isn't it? And Sure Valley do
so this is when we first went in. Yeah, so when we first moved into technology, we took rather than do lots of individual things ourselves to start with, we decided to basically invest in a very well-regarded fund to give us exposure to a very exciting portfolio of investment. So, that's how we started off. But obviously, as I said earlier, subsequently we've been expanding our investment portfolio on a more sort of individual, direct basis with investments in Get Visibility, Low Six, and YOP.
Yeah, absolutely marvelous stuff, Nick. Okay, if someone's listening to this, likes the sound of what you're doing here, but are not yet following the story, just give them 3 quick reasons why they should hit that follow button on your page on Vox Markets and add you to their watch list, please. Okay,
so I think really the key reasons are, we really believe that we have a very attractive investment portfolio, really both through our investment in SVV and also our investments directly. And we think that there is really great scope to deliver growth from this portfolio, which we have demonstrated in the relatively short time that we've actually had these investments. So we're very sort of positive about the future.
Excellent stuff. Nick, it's good to chat to you, and like I say, hopefully we'll catch up in the not too distant future. Thanks very much.
Great, thank you.
The Vox Markets Podcast with Justin Waite.
And joining me on the podcast right now is Alan Green Shoots, Green Stocks. Al, CEO of Brand Communications. What's happening?
Green shoots of recovery, that's what's happening. Hello, Just, how are you?
Yeah, the markets are looking quite buoyant at the moment, quite bullish, aren't they? And do you know what? I know some people are worried about the rally that's happening here when the economy's, in the toilet. But, stock markets look ahead 6 to 12 months when they can, at least. And of course, we may have to pull back sooner or later. But rallies can last a lot longer than people think. And one of my biggest mistakes, actually, was being too bullish at a macro level. And when you're looking at, micro-cap stocks, there's no point. You must just stick to the news on the... Just focus on stocks. It's a stock market. It's a market of stocks. Don't worry about the macro. Don't worry about what you can't control. Of course, if you get bullish, you get bearish, you can put some more cash into your portfolio. But I just genuinely think one of the biggest mistakes I've made is being too bearish. Because there are a lot of commentators on there on Twitter. And that's all they do. They're perma-bears. And if you pay too much attention to them, they've been saying the same thing for 20, 50 years, some of these people. And let's be honest, they're on the wrong side of the trade, because the trend pretty much over the long term is up. Stock market says, I think it's like 2 good years for every 1 bad year, pretty much, if you look at it over the long term. So they're always going to, they're like a broken clock. They're going to be right twice a day, and that's it. But I mean,
all they do is say, the market's usually overvalued. It's going to go down. It's going to fall. That stock's going to fall. And when it falls, they say, "I told you so." When it bounces back, they say, "Well, this is just it's a dead cat bounce. It's going to go." But the thing is, they have a strategy worked out around that, and of course they will talk that. But fundamentally, if you're an investor in the stock market, if you're an investor into stocks, you're not looking to go short of those stocks. You're looking for those stocks to go up. That's why you invest in companies. You invest in companies so to see them grow exponentially. So a 10p stock becomes a £1 stock, becomes a £10 stock. That's what we're all looking for in this business. And that's the fundamentals that drive the market. And as you rightly say, Jess, we're in the eye of the storm, certainly with COVID at the moment here in the UK. But the market looks 6 to 9 months ahead. So it's now saying, well, September, we expect, if what Matt Hancock and the government says is right, most people should be vaccinated by September. So that means that life gets back to normal. And obviously there's an opportunity then for a burgeoning economy, for the economy to recover. Just in time for lockdown next winter. No, but that's what the market's looking at. But in amongst that, we've got this raft of smaller companies that are growing rapidly on the back of developing their own technology, and of course the COVID situation, the impact that COVID's had on currencies. So precious metals have rocketed in value, and of course that's driving a massive recovery in the junior mining sector. Which is so exciting for so many investors who've got small amounts of money invested into those companies. It's a very exciting time. And as I say, this is where you look for a 1p company to become a 10p company, to become a £1 company, to become a £10 company. That's how.
You talk about share price there, not market cap, yeah?
Yes, it is. Yeah.
No, exactly. But there's a guy who I followed a while back, and he literally he's got hundreds of thousands of followers, and he talks about government debt all the time, bringing down the world economies. And he's been doing that for 20 years. It's not going to happen, fella. It's not going to happen. The worst that's going to happen is like it'll push people to hard assets because of inflation, maybe. But in the end, but that's it. But I think stop banging on. But thing is, because he reeks of doom, over his Twitter feed and social media feed. People don't like to be scared, but being scared, sensationalism catches headlines. Like you put a scary headline on the front page, and people tend to read it, because that's part of our survival instinct is fear. And so but do you know what the reality is? If you are a little bit bearish, but you like stocks, the stocks you're in, then just take a bit off a table and buy some more on dips, but there's no point getting all out or getting all in on these doomsayers, because they've been saying the same old stuff for years. It's like that Dr. Doom, Noriega, what's his name? Nobini, I don't know what his name is.
Mourinho.
No, what is his name? The Dr. Doom. He's always he's a really pain in the backside guy. He's really dour, but I don't know where he's from. He's is he Italian? Noribini, I think, Dr. Doom. But there's also one. This is the guy. But ignore them. Listen. If you're an investor, you've got to be bullish. And of course, sometimes when everyone's bullish, it's time to maybe take it off. But bull runs can last for a long time, and you don't want to miss out on them. That's all. So don't.
Well, I think the good thing as well with these microcap companies, they're not generally subject to the whims and vagaries of the main market.
Or the macro. It's got
the macro. It's all about what they do.
I know, pretty much. The Fed putting money, pumping stimulus into the economy in the US, pretty much, is not going to affect, like we'll say, an online portal company like On the Market that I hold over here, pretty much. I mean, not a lot. If they have good figures, which they are getting good figures, they're going to rise. And a lot of these stocks aren't specifically news-driven. Yes, the market altogether can have a bit of a sell-off, and the tide, like I said, tide will go down, all boats will lower. But that's the market, and it's just get involved. Don't worry about we are rallying, but enjoy it. Stay with it. Go with the flow. The trend is your friend. Don't try and be too early back in the trend, because you just miss out, essentially. I've known people calling a correction and And a sell-off for years, never happens. Anyway, let's talk about specific stocks, because we're just playing into the macro theme there of those idiots who are really bearish all the time and change their mind on anything. I feel like it's saying those guys, that one guy, I can't think it's a Northman Trader, I think it's one of them, I feel like saying, do you make any money in the markets? Because you've had the sell-off and you were talking about for ages, but you didn't buy anything when the sell-off happened. So how do you make money? I don't understand. So anyway, stocks, Al, what's the first one up?
Okay, Versarien is first one up. VRS is the EPIC code, and I haven't bought Versarien up. I haven't bought Versarien up because there's any news on the wire today about the company, but they are sort of developing and heading towards, I believe, a point at which they will be that they will receive a re-rating for the market. So Versarien,
they have. They have. If you look at the chart there, I said, they hit the lows of 30 in November last year, and they hit 20 pence back in March last year. In March, the cash. God, it's amazing now how long ago that dash for cash was. It's gone back so quickly. It's March last year. We're nearly a year away from that. But as I said, they're now 65. They've gone parabolic recently. They've really broken through the on the chart there. It's looking quite good. They bottomed out for a long time, and now it's gone up parabolic. Right now, the RSI is at 90. That is not a good place to start.
No, well, it's at 90 because it's risen rapidly today. But I think the company just provided a background for people who are listening to or finding out about Versarien for the first time. They're a graphene engineering and research company, so they have a number of applications, or they've acquired over the years a number of companies that give them a broad involvement in graphene at different levels. 2D technology, they apply the science to technology with the nanine microlayer graphene, polygreen, enhanced polymers range, and also a nitride nano powder as well. And nanine, it was announced last year, of course, last summer, a contract with Rolls-Royce with 2D technology to look at developing graphene for aerospace applications. And that was a real benchmark moment for the company. But it's also important to remember that Ian Gray, the non-executive director who's on the board, has spent his career at the highest levels within the aerospace sector with British Aerospace, and of course he was director of Airbus UK. He's in 2007 he's appointed chief exec of Innovate UK and is basically very well regarded through the aerospace and engineering sector. And he would have got involved with Versarien because of the potential for the uses of and applications of graphene, both in aerospace, in defence, in manufacturing. They have a plastics molding company, injection molding, where they use graphene components to strengthen the vacuum moldings. They have a carbide section which develops the technology for wear resistance parts like drill tips, nozzles, and of course defense and aerospace. So the company has really spent, I would say, the last 5 years developing the business and the offering internally to the point where they now have applications across most of industry. Most applications within industry and at the cutting edge, of course, with aerospace and with defence. So there was a further development in November last year, where because of the thin layers of graphene that or nanine that are produced by 2D technology, it was discovered that through a trial at Ankara University in Turkey that the hybrid graphene content actually worked as an inhibitor for the viral infection, and it possesses antiviral properties doped with the nanoparticles that of course Versarien manufacture through 2D technology. So the fact that this has a COVID aspect to it as well, obviously, is of interest. But that's I think it's important not to get too carried away about that. But the core application here is yeah, maybe I was for a second. The core application is in defence and technology, and indeed there was an MOD contract also announced last November for just under $2 million, a product development agreement. So far this year, we've had Dr. Stephen Hodge, who worked on the team to develop the graphene, appointed as Chief Technology Officer for the group as a whole. So I think the company is set for an exciting year, and I expect that we're going to hear news at some point from the 2D contract with Rolls-Royce, and we'll see how that's going. But of course, the share price has bounced up this morning. It's currently trading at just under 70p. That's up 20%, giving it a market cap of 124 million. But I think once the sales start to roll in from the applications, I think that there's every chance that this could move an awful lot higher.
Okay, all right. Marvellous stuff. Right, what's next, Al? No, I like graphene. Someone said to me, it's amazing actually, because I've been investing for a while. I was in smaller caps for a bit, and someone said to me on my YouTube channel, said, why didn't you look at Versarien? I thought, right, obviously, I held Versarien from 13 pence to 140. So I did a 10-bagger on there, so I know about Versarien. It's amazing that people, and it's obviously new investors, but yeah, I like the excitement of graphene, but there's that still very early stage graphene, which is very exciting, and I think the first time around that's gathered, the hype got caught up there, and it went berserk, but luckily I didn't get out, I just held in for a little while, but then after a while I thought, hang on a sec, maybe this has gone a bit too far. But that's the markets. The markets they always get overbought and they always get oversold, and then they come in the middle sometimes. But yeah, top and bottom is the most interesting parts of the market. Leave it while it's in the middle. Don't touch it. But yeah, cool. What's next now? We got just over 10 minutes for stocks.
Okay, so Venture Life Group, VLG. Mm-hmm. We spoke about Venture Life Group, and of course, Venture Life have had the most incredible year over the past year. The share price went from lows of 22p in March, topping out at highs of 115p in November last year. So Venture Life Group, they develop, manufacture, and distribute products for the self-care market. And of course, self-care is oral hygiene, it's cosmetics.
I like a bit of self-care, Al, do you?
You've got to have self-care. It's very important to love yourself, Just. You know that.
Oh, yeah. Well,
yeah. Okay.
I don't. Who else will? The missus won't.
Well, exactly. There you go. So anyway, what Venture Life have grown the business. Jerry Randall and the co-founder, Sharon Collins, who's the Chief Technology Officer. I interviewed Sharon a few months ago. There's a good interview on the website and also on their page on the Novus Comms website. So worth a look. The company have a raft of contracts with different companies to manufacture through their manufacturing plant in Italy, and they have a tremendous distribution network as well. Partners in the UK include Tesco, Morrison's, Boots, Asda, and of course they distribute through Amazon and Superdrug and loads of other places. So they've spent the year developing and enhancing the product range. They made an acquisition at the end of 2019 from a company called PharmaSource based in Belgium, and PharmaSource revenues in the trading updates in the middle of the year, in the middle of last year, PharmaSource revenues had risen 43% from the 2019 results. Following the acquisition. So what Venture Life are very good at is buying companies and embedding them into the offering and ramping up the distribution through their enhanced network. So they're acquisition driven, and they're looking for companies to buy and bring in all the time. Now the share price is currently trading at 97p. Also, late last year, the company announced that an independent study led by Professor David Thomas at Cardiff University had established that using mouthwash basically killed COVID stone dead. It killed it stone dead within 30 seconds. Papers are due to be released on this research in January, but of course that was responsible for driving the share price forward. And it was Venture Life's own brand mouthwash Dental DNTYL that was involved in the trial, obviously it did great things for mouthwash sales at the time. However, the company's moved on since then. In December, it raised 34 million in an open offer, so it's nearly half its market cap in an open offer, plus a further 2 million, raised at 90p for further acquisitions. It's got three project targets: Project Vulcan, which has the commercial rights to 4 brands for oncology support in the dermatological and oral arenas. They already have experience of manufacturing one of these products at the main plant in Italy, and Venture Life believe they can leverage up the distribution with their enlarged network. And it's going to cost them probably about $5.5 million to acquire Project Vulcan. Then there's Target A, which is another heritage oral care brand in the UK. Net sales of 3 million with a margin of 30%. And again, that's going to be about 5 million. Target B is a household name heritage dermatological brand in the UK, and Venture Life believe they can expand with their network. Again, all of these will be manufactured in Italy, so it's almost a plug-and-play opportunity for Venture Life. And I think once given their track record to date of acquiring these companies, embedding them within the group, and basically generating economies of scale and continuing to grow the businesses, I think at current levels, just above where the raise took place, Venture Life offers a great opportunity for further growth in 2021.
Mm-hmm. What's the chart looking like? Let's have a look at it. VLG.
Really consolidated.
Yes, very good. It's coming over, running over. It'll need to consolidate for a while, but yes, very good. The trend's up there. Trend is your friend. Okay, what's next, Al? Quick.
Don't forget with that the money, the 36 million was raised at 90p, so that's your floor, and it's looking very good.
Floor.
Very good from that.
Yeah.
Okay, third one is Bidstack. Bids, obviously, we have talking about Bidstack or spoken about Bidstack on many occasions, and this.
I did very well, Bidstack. I bought it for 5 pence and went to 40 pence, and I was very excited about Bidstack. But then again, it's one of those ones of there's the hype cycle in all these stocks where they're very sexy tech. It's brand new. Look it up on the internet, right? It's called the hype cycle. And if you're not in early, then be careful. Now, because what happens is it overshoots itself, then rolls over. Same with Versarien, same with Bidstack. They roll over, then they start to gain sort of traction, sustainable traction then. But that curve is a lot less steep. But if you get in early on these hype cycles, you do very well, then de-risk. And then if you want to hold on, you can, or get out, whatever. But yeah, Bidstack, again, went crazy, berserk on the tech, so I like the tech.
Went crazy.
And
came back to 4p.
Now it's come back again.
And it's on the way back, but with good reason. But I think we were talking before we came on air about this just. And I think the difference with Bidstack is that although a lot of people, frankly, James Draper had a bit of a character assassination once at the end of 2019 when there were great expectations on numbers, and of course the numbers weren't delivered simply because they were still in development phase. And
James is a good talker, and he also has a vision. Some people were calling him a BS after they missed the revenue targets, but he does believe in the company, and he sees big things for it. So I suppose that's the job of a CEO, isn't it? To not only sell, but you have a vision, So there we are.
Well, he's also, James is also a big holder of the stock. He and Francesco Petrozelli between them, I think, own about 30% of the company still. But the difference for me always has been that they've assembled an advisory board. So you've got Andrew House, PlayStation, Will Kessoy from AdColony and Walt Disney, Brian Nider from EA Games and Gatepath, Jonathan Epstein from GameSpot, Joe Livesey from Trade Desk and AOL, Pete Beanie from Spotify, and we have this raft of people, and then of course we have Derek Wise, who basically worked for Grapeshot, and he was the chief tech officer there, and Oracle, and all of these people have come in. Derek is actually on the board now as a non-exec, but the rest are an advisory board, and basically James assembled those people so they could basically help them develop and plug into all of the network contacts that they have throughout the gaming industry and throughout the advertising industry, so they could literally plug them into that network as and when the platform sort of went through its various development phases. And we're now seeing the fruition of that work, and it's taken a long time, but there was a very highly significant trading update on December 17th where they said they were seeing greatly increased demand, but rather than testing, the campaigns were now evolving from testing to on plan. In other words, they actually integrated and implemented that as part of their mainstream strategy, which is hugely significant. But this is all after the work has been done. You know, the assessment of the platform, how to monetize it, working with the advisory board to help them get through that process. They've now got there, and the company said they're now placing ads that are generating revenue with some of the world's largest video games group, and they are on track to exceed market expectations. Now, what that exceed will look like, of course, we're going to find out probably end of this month, early February.
So what is it? First of all, we have to know what market expectations is. And we mentioned this before. It's about 1.5 million. Was that what it was? I think it's
about 1.5 million, but there has been talk out there of a run rate of 5 million. So if it's on,
what does that mean? What does a run rate mean?
Well, a run rate means that if they carry on generating revenues at the current rate, then they're going to be generating about 5 million revenue on the year. But of course, that's. I
would suggest people, keep themselves in check a little bit. Don't get carried away, because we don't know yet. I mean, we've been in this situation before where we've, first year we expected 6 million in revenue, pretty much.
All of these numbers have been kicked around, so you can't really form a true opinion on this until we see the numbers that are out. And obviously, with those numbers will come a trading outlook statement. And I think in this regard, James has very much learnt his lesson from setting out the stall a year too early. And I think as we go into 2021, we're going to see cautiously optimistic statements regards going forward. But he said in the trading statement last December, they've seen a step change in the way they were doing business. The average value orders were increasing significantly, and the team have put Bidstack in a very strong position to capitalise on growth, and they were conducting their work with quiet efficiency going forward. So, that's encouraging, but obviously we need to see the numbers. I like
quiet inefficiency as opposed to loud inefficiency.
Quiet efficiency, not quiet efficiency.
Yeah, I'm loud and inefficient. Who's going to hire me?
But I'm quiet and efficient. Yeah, that's it.
Yeah, I'd hire the guy who's quiet and efficient all the time above the guy who's loud and inefficient. Yeah.
Yeah. So I think in summary, Bidstack are at a really exciting juncture, and we've seen the share price start to recover. There was a fundraising at 4p last year. I got involved again at 4p, and I was involved like you just much earlier in the game. But I do think what's made the difference for me all the way through this is just the advisory board. People that are prepared to put their names to it and to help them develop the platform, and that to me is highly significant and sets them apart from some of the.
Well, talking about that, let me just give an alternative game here as well, an esports sort of area game. I've seen Gfinity today. They hired a lady called Catherine Bygraves, right? She was previously at Activision. Now she's head of publishing and deepening brands. Let me just get up the news here. But that was because they didn't read it by an RNS. So basically, she was appointed manager of global digital commerce at Activision. Of course, Activision, massive in the gaming industry, responsible with the global PC digital business. She's now at Gfinity, deepening existing relationships with a number of world successful publishers, including Microsoft, Activision Blizzard, and EA Sports. And of course, this is a month after the appointment of Len Rinaldi, non-executive director, who was general manager for Apple for Western Europe, and he was the CFO for Apple for Europe, Africa, India, and Middle East as well. So a huge appointment. And of course, Chris Cregan is now head of social at Gfinity, and he's got an excellent track record as well. So worth checking him out. So they're building a team, very exciting. But yes, if you look in gaming, esports, there's a couple of players there. Bidstack, Gfinity in the small cap arena, run about. In fact, I think Bidstack is a higher market cap now. It's about 50 million, whereas Gfinity is about 35. Anyway, Al, we've got to go. But I thought I'd give some, an option there, because I hold one, you hold the other, and there's a couple of options there. You know what I'm saying?
There are indeed. Yeah. Okay, Just. Thank you.
Thank you. No, thank you.
No, thank you. No, thank you. Thank you, Chester.
Okay, it's time for the top 5 most followed companies on Vox Markets in the last 24 hours. They are at 5. Mode Global Holdings, down 8.27% to 61 pence. At 4, Nostraterra Oil and Gas. It's up 9.52% to 0.575. At 3, On the Market, doing quite well today, up 13.86% to 115. At 2, Deep Verge, that's up 2.9% to 35.5. And at 1, Argo Blockchain Mining. It's down a bit because, of course, Bitcoin's having a bit of a sell-off. It's down 12.7% to 102.5 pence. Okay, top 5 most read RNSs are as follows. In fact, let's do top 10. Why not? Boohoo at 10, Armdale Capital at 9, Bushveld Minerals at 8, at 7, Union Jack Oil, Russell Development, at 6, Deep Verge confirms maiden Q4 profit guides, 10 million in 2021. What? Oh, yeah, so revenue guidance for 2021 is 10 million. That's good there. Let's go back to at 5, Open Orphan, first volunteer dose in COVID-19 clinical trial. At 4, Vela Technologies, update re St. George Street Capital COVID-19 trial. At 3, Remote Monitoring Systems, board changes. At 2, Argo Blockchain, 1,058 mining machines shipped early. And at 1, Supply Atme Capital, a new cooperation agreement there. That's it for the podcast. Thanks for listening. Muchos appreciate.
The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.